On this channel, I will regularly test trading strategies to see how they perform in the Forex market. At the end of this testing, you will see a statistical report on how profitable they are or if they would lose money over time. I will also give you tips on how you can apply these strategies and how you can improve them. Welcome to TradeHub, everyone. There are many profitable strategies out there, but you have to find the one that suits you personally. Tests will be as objective as possible, and we will find profitable strategies as well as bad ones, which you should stay away from to avoid losing money. If a strategy is too good to be true, that's because it most likely is. I will test these strategies 100 times on different currency pairs to give a realistic expectation of their performance in the Forex market. I won't be testing on EURUSD because that has been done enough times. Instead, we will take a look at different currency pairs like UJ, which is one of my favorites, Pound Dollar, Australian Dollar Dollar, and USD CAD. When trading a strategy, you're most likely using it on multiple pairs, meaning testing a strategy on more than just one pair will give you a good idea about its consistency. The strategy we're going to look at today is a triple EMA beginner strategy, which is usually praised because it is easy to use and supposedly pulls profits. We will put that to the test now. This strategy works as follows. You're using the 30-minute time frame. For your indicators, you have 3 EMAs which are set to 150, 15, and 9. The 150 EMA is used to give you an idea of the long-term movement of the trend, while the 15 and 9 EMAs are used to signal you when to enter the market. Since this is a trend-following strategy, we want to put the odds in our favor and filter out the times when we shouldn't enter the market, for example when the market is already moving against us. We use the 150 EMA for that. I will give you a few examples on live charts after I explained the rules of this strategy. Afterwards, we'll do the backtesting. The rules for entry are: you can only take a buy position when the price, the 9 EMA and the 15 EMA are above the 150 EMA. You can only take a sell position when the price, the 9 EMA and the 15 EMA are below the 150 EMA. You wait for the 9 EMA and 15 EMA to cross. Once these conditions are met all at once, you can enter the market. Risk-reward management rules and exit rules are: the stop loss needs to be set a couple of pips above the last significant swing high or low. Take profit is a fixed 1 to 1.5. So if we take a look here from the 22nd to 24th of February on British Pound Australian Dollar, which is developing right now today at the time of recording this, we have an entry right here. Conditions are met. Price is below the 150 EMA and the 9 EMA just crossed the 15 EMA, so we enter right here. Now for the stop loss, I said before to use the most recent significant swing high or low, which would be right here. So we set our stop loss and move the take profit to 1.5, and you can see you would have won the trade right there. You should use the indicator values in the top left corner to get the exact point of entry. So I'm just cutting in here real quick to let you know that the third trade, which was ongoing at the time of recording the previous section, has basically hit the target down here right now, barely. So because of your spread, your trade might not close when price is reaching the target down here. So you have two options. You can either wait for the price to fully breach this point, which I assume is going to happen in this case because this is a very strong downward movement. We'll see this going on for a little while. Or the other option is to just close out the trade manually. Now let's test the most recent 100 signals this strategy provided on 2 different currency pairs and see the results. So while you can see me do the backtesting in the background, I will give you a few tips for this strategy on how to improve it by including subjective evaluating, which comes through experience. It was expected that this strategy performs very poorly in ranges, but does pretty good in trends, no surprise there really. In ranges, the 2 signal EMAs get so close together that they give constant signals even though there's no clear trend visible. The market just moves sideways, and this can be avoided. One piece of advice I need to emphasize is that it is vital with this strategy to enter the market with multiple positions at the same time when you get the signal from your EMAs, even when other trades are still open. Without getting too technical, in a trend, price regularly pulls back to fill supply and demand. While this happens, the EMAs have a quick cross on the pullback before the price continues moving in the direction of the trend. I will stop the time lapse right here to show you an example of this. If you were live trading this section right here, you'd constantly have 3 to 4 positions open at the same time, speculating on one single currency pair, which I understand can be scary, but 4 out of those 5 trades won in the end, netting you a big plus. This tactic is pretty common among experienced traders. I myself do this regularly with my own strategy to improve my gains. When there's a trend, then try to get the most out of it. I thought I would mention it since some people might not know about this. Any good broker will allow for multiple simultaneous positions, but there are some which prevent you from doing this, so be wary of that. So the results are in. Surprisingly, despite its weakness during ranges, the strategy is still profitable, even if you traded like a robot during these ranges. As you can see on both pairs tested, this strategy would win around 50% of the time, which is good enough for a 1 to 1.5 risk-reward ratio to be profitable. Most wins and losses in a row are also fairly average. Over the course of around 5 to 6 months, you can expect to see a gain on your account of around 40% if you were able to take every signal and enter the market every single time. Now, of course, this isn't realistic because we all have to sleep at some point, so if you want to raise your gains, then you should look into using this strategy on other pairs and backtest it for yourself to see if it works there as well. But this is a good place to get you started. The advantages are that this strategy is simple to apply, but results aren't as good as they could be with a bit of adaptation to the approach of this strategy. The problem is that it will perform badly in ranges when the market moves sideways. However, knowing that, you can tweak this strategy a bit to get better results in your own trading. I, however, kept it as objective as I could for this test, which means I took signals whenever all rules were met. Let me know in the comments if you want me to do a video of this strategy where I show you how to detect ranges early and avoid those losing trades, thus improving the win rate. Please like and subscribe if you found this video helpful. TradeHub signing out now, and see you in the next one.